Anthony Gaona, and special guest Mr. Bridger Pennington from Fund Launch. If you haven't heard of it, please go check it out. But Bridger, thanks for everything you do, and thanks for just making a difference. I'll start off with that because it takes people like you to make decisions to create, and stuff happens behind that. So.
Well, no, it's fun to be on. It's fun hearing about your guys' what you're doing right now, raising capital and doing big deals. It makes me happy to hear your guys' success. It makes me just light up. I love seeing you guys kill it. So congrats to y'all.
Thank you, man. Yeah, we are a product of the product. So we're not afraid to say that, dude. So thank you so much for what you do.
No, that's amazing. We got to highlight you guys, or I want to hear more of your story in the next 12, 18, 24 months. It's going to be cool to see where you guys go and what else you do. I'm just excited to see what you guys do. So it's pretty fun.
Thank you, man.
If you can give everybody like a brief description of who you are, what you do, just kind of highlight 30-second elevator pitch, so everybody kind of knows who you are if they've never heard of you before.
Yeah. So I run a company called Fund Launch that you guys both just talked about. So Fund Launch is a group and service to help people launch investment funds. We have over 70,000 people in our community. We've launched 210 funds in the last 2 years just out of Black Card, which you guys are a part of. Mm-hmm. Just out of that group, 210 funds. That's about 2 funds a week we launch as a service. Essentially, we have a legal team comes in, we have pitch deck designers, the whole thing to help people launch funds. We throw big events, etc. It's pretty fun. Additionally, on that, I've ran 2 debt funds prior. I currently run an 8-figure hedge fund in the cryptocurrency space, blockchain space, and we just launched a GP stakes fund. So I currently manage 2 funds, and then I've ran 2 funds prior, and that's what I'm doing right now. It's pretty fun.
Dude, that's exciting, man. So I know you're doing the crypto thing, right? Would you want to just go in that for 10 seconds, like your view of the market, and then what you're exactly you guys are investing in? Because that's strong, man, to be investing in this market right now.
Yeah, it's pretty fun. So we started this fund in 2022. My partner, Dan, he was mining. He's on the board of Intel for the last 16 years. He's been a huge player in Silicon Valley. He ran a computer company, hardware company, and did some software companies as well. In 2014, he had this whole warehouse of gaming chips because they were selling chips for computers. They'd build these custom rigs for like gamers and stuff. Mm-hmm. And all these chips on their shelves. And one of his employees said, "Hey, we should do this thing called Bitcoin mining." So they figured it out. They started mining these coins. They actually did Dogecoins, Bitcoins. They actually launched the largest mining facility in the state of Utah in 2014. Huge warehouse. And they did obviously extremely well in crypto. This is 2014, 15, all the way up. 2017, he sold a lot, bought a lot of land and real estate, commercial real estate, et cetera. Still held a lot of crypto. And then through 2019, 2020, Dan, my partner, had a ton of friends asking him about, all these billionaire friends, hey, I want to buy crypto. I want to get in. How do I do it? And Dan's very good with security. He's done security work for NASA, Air Force, U.S. Army the last 30 years. And they were begging him, Dan, can you just do this for me? And finally, we came together and said, what if we did a fund? What if we actually built out a full fund, built a portfolio strategy, and actually went and did this? And so that's what we launched. We launched Ugly Unicorn as our fund's name. We find ugly unicorns in the crypto blockchain space, things that are ugly that people aren't talking about that actually are unicorns, that actually do extremely well. So we're a research-based fund. We try not to trade. We try to actually do a lot of research up front and get into positions and hold those positions for a very long period of time while producing yield and we do a few risk mitigation strategies throughout that. So we launched that fund in June of 2020. June of 2022, right when the market was crashing, which was great. It actually proved our thesis out. We risk mitigated very well during the crash of 2022, which was awesome. And then 2023, we had over a 63% return in 2023. 2024, we're up now over something like 30% this year. It's been phenomenal. We manage just around 25 million in assets, all equity, no debt in our fund. We try to play the long-term game of crypto. It's been extremely fun. So that's a little thesis around Ugly Unicorn. We've had a lot of fun with that.
Dude, that is amazing, man. To get involved in 2014, you got a little run up. So that's pretty cool for you to be in that space right now, man. And then, congrats to you guys, man. You've done a lot. And you're all over social now. I think everybody knows your name now. So
it's pretty fun. Yeah, crypto's in a fun spot too. We can dive into that if you want, but we have the Bitcoin halving, Ethereum ETFs. There's a bunch of news happening right now in crypto, which is pretty fun too. But yeah, it's been a fun ride, and I'm in for the long game. I know you guys know that, but I try to play the long game of just business in general. If I can do well and do good in the world and get investors good returns, and you guys know this, when you compound, it's incredible. Over most people think in 2 or 3 year blocks. I'm thinking in what can we do in 10 years or 15 or 30 years? Like, it's insane. If you just do well, if you treat people right, if you have a good mantra, return capital to investors, you can do extremely well over decades. It's funny. I went and researched like Ray Dalio and Warren Buffett. Ray Dalio and Warren Buffett, they started their first funds 28 and 26 years old.
Wow.
Okay, with like $100,000. And they just compounded for 50 years. Yeah. And all of a sudden, Ray Dalio, oh man, he's so big. Like he's been at this game for 30, 40, 50 years. It's incredible what you can do when you have a long horizon and you do well. So that's kind of my mantra with this whole game. And so anyways, I love seeing people like you win. It's going to be cool to see what you guys are at in 10, 20 years. It's going to be really cool.
Thank you, man. Yeah. If you could kind of deep dive into it, you want to give us a little bit more about Bitcoin and kind of where the space is and that kind of stuff? You kind of alluded to it right now.
Yeah, I'll give you a couple just things to think about. And we have a full video on uglyunicorn.com and other stuff. I'll just give you the hors d'oeuvres, kind of the nuggets here. But so right now we're filming this, middle of March. We have Bitcoin, I'll give you the broad view. There's a thing called cycle theory in Bitcoin. Bitcoin has historically ran in 4-year cycles. We are entering the fourth of these 4-year cycles. They usually do a run up. If I had a chart, I'd pull it up, but I'll just talk you through it. 2013, we had a peak. We then had a 70-something% sell off. It took about a year to recover. We then have a rebuilding phase, and then we have a major run up. 2017, we had a peak. 4 years later, we then capped. We fell 70-80% over the course of about 12 months. We rebuilt. We then had another major run up. 2020, 2021, huge peak. We fell. That's when we started our fund. We fell 76% last cycle. We fell for about 350 something days. We recovered. We've now approaching the next bull cycle. Okay. This has happened 3 times now, going on 4 times. Now, what has kicked off the next, at least historically, Bitcoin cycles is what's called the Bitcoin halving. The Bitcoin halving event is mathematically built in. There are only 21 million Bitcoins that can ever be created, ever. Mm-hmm. Right now, about 19 million have been mined or created. And how that's created is, there's about, let's just, for an analogy's sake, let's say there's 10,000 computers around the world that validate transactions. So if I send money to Daniel or whoever, Joe down the street, a computer will validate that and 10,000 computers will validate it. And for doing so, they get rewarded coins. And in this case, it's called Bitcoins. So they get rewarded these coins. Every 4 years, their rewards get cut in half. So, for example, right now, about $500 million of Bitcoins are created a day, are earned per day, you could say, by miners. On estimated April 19th, just next month, those rewards will be cut in half. So it'll literally go from 50 million a day to 25 million a day.
Wow.
What this does is it puts a strain on supply, which historically has increased price. You contrast that as well with just recently, we had 11 spot buying ETFs that opened up. And that's very significant for a lot of reasons we can dive in. But now institutional players are buying Bitcoins around the average is about $500 million a day is inflowing into Bitcoin. 500 million a day just on the ETFs. Wow. And we're producing about $50 million a day. And it's going to be down to $25 million a day. So it's just math. There are just way more inflows currently, at least. And that's what we've seen it with historical cycles. So we are just approaching this next Bitcoin cycle. Bottom to top last cycle, Bitcoin did a 20x, so 20 times just roughly. Ethereum did about a 28x bottom to top. And then altcoins did, 30, 50, 100x bottom to top last cycle. We believe this cycle, Bitcoin will do around a 4 to 5x bottom to top, something like that. Ethereum will do maybe an 8 to 9x, depending if their ETF gets approved. Altcoins will maybe do a 15 to 20x this cycle. So it gets muted as you get bigger. It's hard to double when you get so big. Yeah. But still, that puts us, we think again with this cycle, and ETFs could change this theory, but we're targeting around $175,000 to $200,000 Bitcoin over the next 18 months at a peak. And that's kind of our target range right now on Bitcoin. We hold in our fund about 80 to 90 different positions throughout the cryptocurrency market. We do a lot with alternative coins and different coins. We have about 9% exposure to Bitcoin right now, a little bit more exposure to Ethereum, but we spread across the landscape. So anyways, I could go on, but I'll stop. The other compelling news right now is BlackRock just yesterday announced they're launching a $100 million tokenized fund. We can dive into that if you'd like. And then additionally, Ethereum is waiting 11 spot buying ETFs for Ethereum as well. The SEC is now looking into it. We'll see if they get approved here soon, but that's the current update. But just overall landscape, there is a lot we are just starting the next bull rally of the fourth cycle. This is how it, at least historically, has happened. And we're just getting started. We think we're still very early on this cycle, and it's going to be a pretty fun ride.
That's crazy. How long do these cycles change over each tranche of each cycle, or is there like a set 24-month period where it kind of cycles through?
Yeah, most of the time it's around 12 to 18 months after the Bitcoin halving. Actually, the three previous cycles have almost been exactly 18 months. Like this cycle, people are theorizing it could be broken because of ETFs. It could change. So again, take it with a grain of salt. Yeah. That would put a top on this market that we're in right now, middle of 2025. You'd probably, at least for us right now, we're thinking we want to start selling positions June, July of 2025. One theory is maybe it's earlier. Maybe it's a year from now we'll be peaking. Maybe it's going to be a little bit longer with the ETFs. We'll see. And I reserve the right to change my opinion, but currently I would tell people to start exiting positions for this cycle on, maybe June or July of 2025.
Interesting. Very interesting. One thing I want to talk about is I love the Bitcoin space. It's very interesting, and it's a lot of people don't understand it, and I think it's very early on to adapt. And if you have a lot of information, you can definitely create your own future in that way. Are you long-term holding stuff, or is it always going to be to ride the wave on the top and sell on the bottom?
Good question. We try not to trade, and we think of ourselves more of, I guess, swing traders. We trade in terms of years, rather than day trading. So we will exit positions during a broad cycle trend. We try not to exit positions on a weekly trend or a daily trend or even a monthly trend, if that makes sense. Good. But we do think on cycle trends, because historically, I mean, you look at people that I know, at least people that try to day trade and move in and out, they end up losing. Almost always. I don't know really anybody that's traded Bitcoin or Forex for more than 2 or 3 or 4 years without blowing up their account, because they want to add margin, they want to do different trades, and what happens is they just get stuck in bad positions. And so we try to play the longer term game of crypto. Some of these positions we may just ride through the next cycle wave as well, because we believe in 8 or 9 or 10 years, this is a very compelling future for a lot of these technologies. And maybe I'll touch on that for a second. We approach crypto like technology. We just think of it as good technology. That's what we underwrite for. So we generally aren't investing in like meme coins, in Doggone coin or whatever. There's a bunch of funny ones right now. There's frogs and all sorts of crazy stuff. We typically don't do that. We try to look for things that have utility in the real world. We'll look for blockchain, and there's actually some very cool AI and blockchain projects right now. And they have a token that represents their projects. We have ones that are, it's blockchain and real estate, blockchain and accounting, blockchain and genetics. And they're using those together. It's a company. They actually have revenue. They have employees, and they have a token, a coin that represents that company for real world utility. So that's what stuff we like to get into. It has a compelling future. We feel like it's kind of like the internet in the 1996.
Yeah.
There was a lot of scam stuff, but there's also some underlying good technology that we think will last for the next few decades.
Yeah, I think that's where a lot of people are going to miss the boat, right? Because if you think like an investor that's not very, very savvy in that space, they're just thinking about, if I buy a certain amount of tokens, I'm going to ride it up, just based on demand, right? Like the greater fool theory. But if you have the fundamentals, right, like you said, like AI and other companies that are actually allowing you to participate in their company through that offering, that's when I think it's going to be a tremendous, because these companies, as they grow and as their token becomes more valuable, then you get to ride not only the growth of the company, but also the growth of the coin itself.
100%. Yeah. So that's what we try to get into.
So I want to ask about this. I didn't know Ray Dalio, and you mentioned Ray Dalio and Warren Buffett started when they're in their 20s. What do you have to say, people maybe wanting to do this in their 20s without necessarily the information or thinking like that long-term play? I think you're the perfect example of somebody in their 20s. Who knows when you're in that age what you've done and your track record by that? Because I think you're definitely playing the long game. What do you say to somebody who's in their 20s wants to learn the fund space and invest, whether they're doing real estate or crypto or any other type of fund?
Well, I'll say a few things. Currently 2024, it is the easiest, best time in world history to start when you're young. The world is becoming flat, as some would say. There's a book that actually was written called that. And it's not like the flat earther theory. It's the idea that anyone can compete with anybody around the world. Mm-hmm. You're not just competing against people in Dallas, Texas, in your local market. You're competing with a guy in Iran. You're competing with a lady out of France. You're competing with someone out of Mexico, because the internet has made the world flat. Everyone is on equal footing, I guess. And AI, I think, will further do that. And so I at least for me, my story, at least my path, I'm currently 28 years old. I started my first fund at 22 years old in college.
It's amazing, dude.
and I won't bore you with my whole story, but my dad and brother were both in the investment fund space, taught me a lot about funds. I first learned about funds like crazy. I just learned and consumed as much as I could. I then saw opportunities for funds, and I thought, you know what, I'm gonna launch my own fund. I pitched my dad for money. My dad said no, but I went and raised some money from other people, pulled together. I pulled a teeny fund together. It was $49,000, my first little fund at 22 years old. Teeny.
Wow.
But it was enough to get started. I got a 64% return to those investors. So small amount of money, but good return.
Tremendous.
What happened was I dovetailed that into our second fund. Our second fund, we raised and deployed millions of dollars of that second fund off the track record of our first fund. And then that we did very well. Actually ran that for 3.5 years. We did extremely well, returned all capital to investors plus a very handsome return. And a competitor bought us out. We then dovetailed that into Ugly Unicorn, which is our crypto fund. I raised $10 million in our initial launch. Ta-da. I hope my next fund, we raise $100 million in our initial launch because we've done so well with the capital we've been given, if that makes sense. And so that's kind of the game I'm playing. I'll tell you just one, I guess, little story though. I was running my fund in college. I was a pretty good student. I was in the finance programs. I wanted to go work on Wall Street, investment banking. And then I was running my fund as well in school. I had some like other students that were running it with, like I hired them as interns and stuff like, hey, you're going to do this, you're going to do this, you're going to take phone calls. Like I made a little team. I'd started a bunch of businesses in college. And so anyways, I go to this internship in Silicon Valley while I'm running my fund. And I'm out there and I'm working my guts out. My boss is there. He's an incredible dude. This guy he'd probably worked there for 10, 11 years. Worked his guts out. I mean, this guy was working 80 hours a week, 10 years in. I mean, he worked way more than I did. And I just felt, bad for him. I estimated, he was probably making $500,000 to $600,000 a year, something like that. It's kind of what I estimated he was making, which is good money. Don't get me wrong. And I was sitting there like, okay. So, and his goal, I'd ask him, he's like, yeah, one day I want to run my own firm or I'm going to try to get promoted. And he was still trying to please the man, right? To get a better ranking or better job. And I remember for whatever reason, I don't know if this is arrogant or just, I don't know how I felt, but at the time I was making about $125,000, $130,000 a year myself running my fund in college. I was already making six figures a year.
Amazing.
And they gave me a job offer. Hey, Bridger, we want you to come out after you graduate, come work for us in Silicon Valley. We'd love to have you here. And for whatever reason, I looked at that guy and I said, if you give me 10 years and I spent 80 hours a week on myself and my own businesses, I bet I could make more than $500,000 in a year. Mm-hmm. And if I don't, I'll learn a lot of stuff. And secondly, I'm not appeasing to the man and trying to get promoted. I'll be my own king.
Yep.
And I remember I was like, I remember actually I prayed about it. And I felt prompted as well by God. I'm a God-fearing person. I felt like you should not take this job offer and actually go full out on these businesses. And so that's what I did. And crazy enough, the next year I was close, but within 2 years I made $480,000 in 1 year. And the next year I made over $1 million. And I was like, holy crap. Like it was a couple of years, I'd already beat that guy. And then I made $1 million just this is personally to me the next year. And I was like, wow, this is crazy. And I now am running my own business and thing. I don't share that to brag or anything. I just share that for someone in their 20s listening to this. Like, it's possible. Bridger Pennington, I'm not that smart of a dude. As you can tell from this interview, I'm just a pretty average guy, but I feel like I've applied myself in a specific asset class very intentionally, and it's helped me extremely well. And I think it'll keep compounding hopefully over years to come as we continue to grow.
Man, I commend you, man. Yeah, you've done a lot in a very short amount of time. I don't know if you looked into HiveMind, but we have it's basically the same concept, like where we offer training, that kind of stuff, like how to start the fund. We've done that with real estate investing, right? So we're buying these $1 million ranches in Texas and we're developing them out, flipping them, that kind of stuff. So when somebody asks what fund launch is, I'm like, it's a HiveMind for starting a fund. So really applaud what you've done, man. It's amazing.
Well, great. It's awesome. I love it. I gotta come see more of your stuff. I haven't been in there.
Yeah, it's exactly what you're doing. It's very similar, very, very similar. And I love the model because it's empowering people. And I love the biggest thing about Fund Launch is they empower individuals. It's not just white collar. It's not just blue collar. It's individuals. I went to a Fund Launch event in Salt Lake City, and we were hanging out after the event. And I didn't even have told Anthony the story, but I was hanging out after the event, and there was 3 people there that were truck drivers, because I'm a truck driver. I was used to be a truck driver. Used to be a truck driver in my early 20s. And I mentioned I was a truck driver, and the guy next to me, hey, I was a truck driver too. And then the guy around him, I was a truck driver too. And we're all talking about funds. So it was just like people have if you have the foresight to look elsewhere and look at other opportunities, you can do whatever you want. You're not branded that one thing that you kind of went down that path and you kind of created. So it was really intriguing to
I love that story. That's amazing. I love that.
To see varying types of people at Fund Launch. And it was a really unique experience. So you can do whatever you want to be if you get the right information from the right people. That's great. So
I think something where you shifted our thinking. I was going to say, I think something you shifted our thinking is because we were doing like a traditional real estate investment, right? So you buy a property, you flip it, you take those funds, you reinvest it to a new area. And that was our primary business model. It's been happening for 5 years, which has done very, very well. But once we started following your content, we started it completely shifted our whole thinking because we didn't have to change our business model at all. But now we're thinking in terms of, hey, we need to be amazing at raising capital. And that makes all of our deals flow a lot easier, right? Because in real estate, a deal gets choked up, things slow down. But now thinking in terms of us primarily being capital raisers, we raised more this year than we have in the last 5 years, just from being exposed to your content, dude. So, I mean, it's just completely like a mind shift, game changer, big time.
I love that. That's so. I just love seeing your guys' success, man. It's awesome. I just love hearing it. So cool.
So let's talk about raising capital because I think everybody has like that ceiling over their head. Like I can never raise capital. How did you raise your first 48 grand and how are you raising money now? Like what's the difference now and what it looked like when you first started? Because I think it changes as you get more experience and you become more confident and you can produce an ROI. So listen, I think that's a great question.
Yeah, I like it. 49,000, by the way. Don't cut me short. 49,500. So yeah, let's talk about that. So I remember I was wanting to launch this fund. I went and pitched my dad for money. My dad said no. And I was like, well, how am I going to raise money? Like, I don't have a track record. Never done this before. I haven't graduated college. I'm fairly young. I'm 22 years old. Who's going to invest with me? And I asked my dad this question. I said, well, it was like a couple days later, we were on the whiteboard and he's like, Bridger, imagine, give him this example. He says, and I think you guys have heard this before, but I'll share it again. He goes, imagine me and you found a Lamborghini Aventador it's a $300,000 car. There's a lady selling it in Billings, Montana. And she is going into bankruptcy. She needs to sell the car quickly. And she can sell the car to us for $50,000 on Saturday morning. But we have to come up with we can't use our own money. We have to come up with 50 grand by Saturday. We can buy the car and we believe we could flip it for $300,000. No problem. Maybe even 350 if it was a good deal. My dad asked me the question, could you find 50 grand by Saturday morning?
I think so.
And I was like, you know what? Like, I'm going to make $250,000 this weekend. Like in college, like I won't sleep for a couple of days. I got to talk to former bosses, college professor. I'm going to knock doors, but I'm going to figure it out. Like I've got 4 days, 5 days. I will figure it out to make $250,000. Like this weekend, I'm going to do it. And he goes, okay, what if it was $100,000? You're still going to make $150,000, $200,000 spread. Could you do it? And I was like, man, I think it'd be tough, but I think I could do it. And he goes, why? And I said, well, the deal is so good. And your little example you gave me, that deal is like foolproof. It's so good. It's such a good flip. Like I can make tons of money on it. Like, Dad, he goes, aha, there it is. And I go, what do you mean? He goes, 3 minutes ago, you were telling me I'm too young. I'm inexperienced. I can't do it. And all of a sudden you're telling me you could find $50,000 by Saturday morning if the deal was so good. And he goes, there's your solution right there. If you can, when you're starting out, you lean way heavier on the deal. And you got to spend a lot of time finding truly a really good deal. I mean, it can't be kind of a good deal. It can't be okay. It's got to be an actual really, really good deal. What happens is you find a really good deal. Investors, you say, hey, just look at the deal. You poke holes in the deal, right? Now, he goes, later on in your career, you'll lean more on your experience and your team's experience. Hey, just poke holes in us. Look at what we've done. And yes, we're going to look at all these different deals, but you're going to lean more on yourselves versus the beginning, you're going to lean more on your deals. And he goes, that's how we launched our funds. They would just lean heavy on deals. And so hopefully that makes sense. But took that approach to raising capital. And so I was launching this debt fund. I would go and pitch these investors. I'd say, hey, let me just run you through the deal mechanics. Right at the beginning, I'm like, this is what we're doing, boom, boom, boom. And I start running them through every piece of the deal. And I tried to explain it in a very simple, just organized way. And I said, hey, here's where we could lose money. But reality, we're going to risk mitigate all those things where we could lose money. And our upside is here. I mean, there's this huge gap of alpha, of this asymmetrical risk versus return. And I guess lo and behold, investors liked that idea, and that's how we got those first checks in. And I'll just tell you this one little story though. When I was pitching, so I would be talking through the deal, whatever, and I would pause mid pitch, and I'd say, hey, Anthony, Daniel, I know you guys are great. I know you probably love this deal, but I bet you're sitting there thinking that I'm too young to be pitching and presenting this to you today. I just call out the objection. Like, I know you probably think I'm too young. Let me explain to you why I believe that's an advantage for me. Number one, if I was old, gray hair, and pitching this deal, well, I've got a lifestyle to live. I got a big house. I go to Hawaii 3 times a year. I got kids. I'm watching Netflix. Like, I'm already made it in my career. Hopefully I do well with your money, but I've already made a bunch of money, and I'm trying to just collect management fees from you. Okay, number one. In my fund, I'm collecting zero management fees. I only make money when you make money. So I lean into that edge. Number two, because I'm young, I only live on like $300 a month. I actually would say this. I live on like $300 a month. I have no reason to commit fraud. The guy that has the big house, the big mortgage payment, he's got to keep up his lifestyle. He might commit fraud and steal money from you. Me, I am literally here because I want to get you the best return possible, because I want you to go brag to all your friends about how great of an investment you had with Bridger, because I want to do this for the next 20 to 30 years. And because I'm young, I can work hard, I can stay up late, I can dig into deals, I can spend more time on the phone with clients, I can really be in the details, in the weeds, rather than someone who's done this for 30 years. They're not going to be in the weeds, right? They're not going to do this. Anyways, that was my pitch. And I'd say, and whether you like that or not, I had to lean into my constraints, because that was the objections. I just leaned into it. And I said, hey, I know I'm young. This is why it potentially benefits me. And most of those investors liked it. And anyways, we raised that little bit of money. And then I said the same thing on that second fund. It was same strategy. And we raised about 800,000 right at the beginning, which was plenty of money, because we're doing these loans were $2,000 or $3,000 or $4,000. Then we grew that beyond from 800,000, but we raised about 800,000 just at the beginning, which I just leaned into those constraints at 20. I was about 23 years old. I did that. There you go.
I love the story, because you face the objections head on, and it doesn't fear any doubt. Like, you know what their questions are, concerns are, and you're bringing it up right up front, and it lays the playing field where now you have a valuable pitch without the concerns,
But it's a lot. Yeah, I'll say this again. Like, people in real estate that are listening, it's so much easier to lean on a good real estate deal and say, hey, we got this great deal. It's in Miami. Here's the breakdown. We plan to do 10 more deals just like this. This deal is closing the next 45 days. If we're raising this fund, we're going to do deals just like this, and poke holes in the deal. Please tell us if you find holes. Please poke in them. But man, we think this thing is almost foolproof, if not foolproof, on this deal. So that's how I like to raise. I still kind of raise on that premise. We've now shifted a little more to experience, because the hedge fund is more on experience and track record as well. It's a little bit harder to pitch a deal, because there's not like a certain deal with a hedge fund. That's a nice thing about real estate. It's very tangible.
Dude, I like what you just said right now about like saying, hey, like if you see something I don't see. I love that phrase right there when you're raising capital. I used it today, actually. So these guys are going to send us $550. And he said, hey, look, we're trusting your judgment. We'll look into it, because I asked them to go ahead and run their own comps. But I said, hey, look, I guess they might have thought maybe I took a little offense to it, because they were questioning the deal. And I said, dude, I would actually prefer that you guys pass on one here and there, so just, hey, like if you see something I don't see, pass on the deal. So that's a great like mini takeaway to get instead of hammering them into lending you the money, you kind of just do a little passive, like, hey, I would love for you guys to pass on this if you don't feel it like I feel it. So that's amazing, man. Like that just threw out.
This is really good. It's really good tips. So now you're pitching more onto the experience side, you're leveraging your hedge fund. Are you still doing that debt fund, or is it all crypto right now? 100% crypto.
So yeah, the debt fund we actually sold. I ran that for 3.5, almost 4 years. We had a competitor come buy us out, so I sold that fund. Actually got an exit on that, and had a decent exit on that fund. And then currently I run our $25 million hedge fund. And then we just launched a GP stakes fund called Fund Launch Partners. We're raising $50 million for that fund.
So where's that capital going? Still crypto?
No.
That's a GP stake. So that's what we do is actually with members of Black Card and beyond. What we'll do is, like, for instance, like something like you guys, we'd say, hey, we love you. You'd come pitch us. We have about 200 to 300 deals we're looking at. We would become a partner in your GP. So we'd say, hey, we're going to be an anchor LP for you. We're going to write you a check for whatever, for some startup costs when you're getting going. We're going to be on your team as well. So we'll take, 7, 8, 9% of your general partner. We're going to be on your team. You can leverage our experience on your pitch deck. We'll also write you a check into the fund for, let's call it $500,000 into the fund. And then we also can give you some startup capital. Maybe it's $100,000 just to get you off the ground and get moving. And we're going to be partners with you on this fund. We're going to be partners and investors in the fund. It's called a GP stake fund. So we take stakes in GPs. So we want to do about 20 to 30 deals over the next 18 months. We've already done 3 deals, which have been phenomenal. We have a venture capital fund we're working with, a real estate fund, and a mobile home park fund that we're working with right now. And it's been phenomenal. So we are asset class agnostic. We will work with any asset class. We just want to find really good operators running really good funds that just need our leverage and expertise to help them launch and scale through a GP stake.
Well, we're singing your praises, man. So hopefully we can send a bunch of people your way that have good offerings like that too.
Yeah. Come talk to us. Fundlaunchpartners.com. You can come submit your whole fund. We just had a full 2-hour meeting yesterday. We reviewed a bunch of deals yesterday. We're doing it right now. We're deploying capital. So
I love that model because you're investing in your students, and I think that's the biggest thing.
That's what we do. Yeah, we invest in our students. We put out capital, or we go raise it.
Yep. So I want to ask you this: can you explain what a fund of funds is, just for people who've never heard it before, and the power of fund of funds? Because I want to. A lot of people in the business and real estate space, they feel like capital is very hard to come by. But one thing we're realizing is that there's trillions of dollars out there. There's a lot of money out there for the right opportunities. So can we talk about like fund of funds and different types of fund structures that actually have large capital interest?
Yeah. So to just quickly answer your question, fund of funds is a fund that invests in other funds. It's very simple. Similar to like our GP stakes fund is almost like a fund of funds. We're a fund that invests in other funds, but we take stakes in those funds. Fund of funds just simply write checks into other funds. The reason for that is some funds have large minimum commitments. You have to have $100 million minimum commitment to get into certain funds, like Ray Dalio's funds, for example. And most people don't have $100 million. So you invest into a fund and everyone puts their money together and they write a check together at $100 million into that fund. And oftentimes they can reduce fees and reduce, carried interest, et cetera. So that's what a fund of funds is. They generally, in my opinion, only work at a larger scale. Fund of funds, in my opinion, do not make sense at a small scale. You have to be running a multi-100 million to multi-billion dollar fund of funds for it to make sense for your investors, because they're getting 2 fees, they're getting double feed. So most fund of funds are massive that way. And to your point, though, and I want to kind of dovetail on this, Daniel, is there is so much money out there. I've had to rewire my brain multiple times to be like, there is so much capital out there. Me and Lincoln last week went to the Greenwich Economic Forum. And so we're there and, hey, I'm running a $25 million fund. We help emerging fund managers. In most of these people's minds that we're talking to, an emerging manager is anybody less than $1 billion. That's still emerging. Oh yeah, you're an emerging manager. And for us, we're like, we're like less than 50 million. That's an emerging manager to us, right? It's just different vernacular. And they had a panel there. These guys were all managing pension plans, $50 billion, $80 billion, $120 billion pension plans. Minimum check size is $50 million. Minimum, bare minimum, that they will write into a fund. The fund, they want to be less than 10% of that fund, meaning you have to have a $500 million fund to even talk to them, right? Minimum. They tend to like to write checks in the 250 range to $500 million range. That's what they like to do. And they're not joking. That's actually what they do day in, day out. So there is, to your point, it's just like, that is just, you have to rewire your brain on how much money is out there in existence and like flowing through the economy. And so, it's hard to do, especially when you're grinding, when you're on $300 a month, when you're on, it's hard to think there is just trillions of dollars floating around. I just need to open my pockets and get some. It's hard to think your brain that way. And And something I had to do, and I still do to this day, I rewire my brain to think in terms of what would I do if money was unlimited? Meaning, I still had to generate a return, but if I had unlimited amounts of money, what would I do? Would I go buy that skyscraper? Would I buy MGM Grand? Would I buy the Dallas Mavericks? What would I actually do? Where could I produce yield? And it's an interesting thought process. Would I go buy a 500 unit apartment complex? Would it actually make sense for me to buy that? Well, what's the mechanics? And to think through, because to rewire your brain of, if I found a good enough deal, whether it's a 500 unit apartment complex or a 5 unit apartment complex, I can raise money for it. It just needs to be a good deal. And so I've had to rewire my brain to stop thinking in terms of what could I invest into, and change that to what's just a good investment, period, point, stop. And the money will find it if I can find a good investment. Does that make sense?
Oh yeah. Absolutely.
I'm sure you guys have done a similar thing, but it's hard to rewire your brain. Like, I could buy that skyscraper right there if it was a good enough deal. And if you know what I mean? Like, it's strange to walk around and think that way, but what it does for me, at least, helps me think way bigger. And actually, I actually do think it's a real thing. If you did find a good enough deal, I think money, there is so much capital in this world. It is trying to look for yields and good deal.
I'm gonna just tell you everything you just said right there is actually what changed our career, because we were going after anything, right? Anything that would produce a yield, whether it was 10,000 or 50,000 or 100,000. We started following Fund Launch. We started thinking a little bit bigger. We reshifted our business model into only going after deals that are $1 million and up. And now we made over $1 million in the first 5 weeks of this year. So just with that one simple mindset shift, like you said, there's giant amounts of capital out there, but they don't like little deals. They like bigger deals. So once we started thinking like that, man, now the money's starting to flow in quickly. Now we're having to scramble. We need more deals right away. So
I love it.
Big time mindset shift.
Yeah, I love it. It's hard to do too. It's hard to do.
Very hard.
But kudos to you guys, man. That's and I think what will happen over our careers is we'll just continue to do that bigger and bigger and bigger. And then you see these deals that are these, 10 or 20 or $50 billion deals. You're like, wow, who put those together?
Right, dude.
And it's pretty cool. So
we're signing one today. We sent out over $6 million in offers today that we're going to get signed up. One of those is a 400-acre ranch that we're going to turn into a housing subdivision. So that one's going to end up in 60 to 120 million in gross sales. So that would be our first big project that we're doing. So hopefully we're starting to inch closer to those 50 and $100 million deals more often. I
love it. Well, and actually, I'll add this, and you guys are living proof of this. There is I mentioned the thinking bigger, but there's also a piece to just doing deals and get going. Because what it does is it builds confidence in you and your team. Hey, man, we just crushed that single family deal. Man, should we try a duplex? There's something to that. And then, we just crushed that deal. And for you guys to say, we just bought this big ranch. And it's to you, it's just rolling after, it's going to be so easy. We're going to do this and this and this. Because you have confidence because you've done this for years. Yeah. And so I believe there's a massive amount of psychology that goes into this game. Number one, thinking that there's unlimited amounts of money that I need to play bigger. And number two, building the confidence within yourself and your team that you can actually do these types of deals. Over the course of a lifetime, you can do incredible, extraordinary things when you have those two mindsets paired together. I think you guys are living proof.
Thank you, man. I feel like we owe a lot of it to you and Fund Launch and Black Card. So, yeah, man, I hope that we keep on running together and we'll make you proud.
I love it.
Where can people find you online? I think we're going to end it here. It's been such a great episode. I know you have time sensitivity on this one. So we appreciate you coming on. But where can people find you online? And I know you have a live event in April. If you want to pitch that.
Yeah, so we have Fund Launch live in April. This is our mass event for the year. It's our third one we've thrown. 2,000 people in Orlando, Florida, all around investment funds. So this is meant for people that want to get in the space of funds. This event is actually going to be different than our previous events. It's going to be very choreographed. Every speaker dovetails in the next one over 3 days to tell a compelling story around how do I launch a fund? What are the actual tools, mechanics, pieces, nuggets I need to build this thing together to launch a fund? Or if you have an existing fund, to scale my next fund. That's the idea of Fund Launch Live over 3 days. So we are very excited. We have an incredible speaker lineup. I won't bore your audience with that, but we've got, one of the Steve Eisman from The Big Short coming to speak, $30 billion fund manager. We've got incredible people coming to speak. It should be very fun. We have a gift for you guys, for your audience. If they want to just start in the world of funds, we have a free course on funds. So if you go to fundlaunch.com, Funlaunch.com has our hub for everything, but at the bottom, there's a thing called our Fund Launch Accelerator. It's a free course completely on funds. It's 20 plus videos that you can just dive in, start learning, get your feet wet on the fund space, and just get going. My goal is to democratize the world of funds, help more people understand what funds are, how they're put together, how to launch one, how to scale. And I believe more people need to do this. I believe more people need to figure out this game. Because if we don't, we will be slaves to BlackRock and State Street and Vanguard who control the entire world.
Absolutely.
And we need more people like me and you to understand this game, how it functions, how it works, where's capital being deployed to, number one, keep these people honest, and number two, even compete with them on deals and just create a competitive marketplace. I'm all for competition. I'm all for capitalism. I'm just not for monopolies at the top controlling the whole world. And so I think it's a civil duty of ours to understand the biggest game on earth right now, which is investment funds. Funds own everything on earth. And so we need to go out and do that.
I told Daniel last night, we've been teaching our audience how to pull the land together, like to get land deals. I told them we're going to shift our business model right now to raising capital. We're going to start teaching our people how to go out and raise capital for that exact reason. We got to give some pushback right now before there's nothing.
Yeah, it's a huge thing. We have Oren Klaff come to speak. If you guys have read Oren's books, incredible. Flip the script and pitch anything. He's coming to speak at our event, and he's a great guy. I can introduce you guys as well. He's been fantastic with capital raising on our stuff as well. And I know you guys are great capital raisers too, but it's massive. More people need to understand this. That's why I'm okay to work with other people and play ball, because we just need to help truck drivers, like you mentioned earlier, understand this game and play in this kind of bigger realm. So anyways, hey, I want to say thank you guys so much for having me on. It's been a fun episode. Send me the clips. I'd love to work with you guys and share it to my audience. You guys are so great. And I love having you guys in Blackheart. It's so fun.
Thank you, man. Love the energy, dude. Thank you.
Yeah.
For everybody here, go like, share, subscribe. We'll see you in the next episode. Thank you.